Welcome to the Charleston Real Estate Connection Podcast, connecting and reconnecting you with all things Charleston. I am your host, Nia Joy, your Golden Realtor, licensed in the state of South Carolina. Welcome to the show. Welcome to episode 4 of the Charleston Real Estate Connection Podcast, connecting and reconnecting you with all things Charleston. I am your host, Nia Joy, your Golden Realtor, licensed in the state of South Carolina with Homegate Real Estate. Thank you so much for listening. I'm so excited because today we have with us a seasoned entrepreneur, seasoned business person. She's a native of Charleston, South Carolina, and she is actually in the mortgage business. I have with us today Tamara York of Asset Assured Financial Services. Tamara, thank you so much for joining me again. That's our little inside thing. I have had the pleasure of working with Tamara on transactions, and my clients absolutely love her because she's so professional and so good at explaining the mortgage process with them. So Tamara, thank you again for joining us. The topics for today are going to be purchasing a home with your tax refund, purchasing a home with student loans, and purchasing a home if you have collections or derogatory accounts. So I am so excited to dig into all these topics. And if you want to go ahead and get started and tell everyone a little bit about yourself and how you are connected with the Charleston area, I would love that if you want to give us a quick background about you.
Perfect. Well, I want to start off saying Happy New Year to everyone. We made it 2020. It's great. So now we're going to become homeowners in 2020. So to get you into your home, we're going to give you some information as far as, how to do that, in corners of getting into your home, basically. So like Nia said, my name is Tamara York. I'm a mortgage loan originator, but I'm under a mortgage broker. So basically, we can do everything a bank can do, but a bank cannot do everything that we can do. So in an instance, basically how that works is we have mortgage loan products for all your needs, whether it be, new construction, bank statement loans, whatever it is, we have a mortgage loan product. Like I said, I'm originally from North Charleston. I got 2 beautiful children, and I love doing what I do. Just running businesses just to be, successful, helping people. I would love to be a blessing to others.
Yes, you do. You are definitely gifted to serve people and help them with purchasing their real estate. I mean, because my understanding, you not only work with people that are buying homes, you also work in commercial real estate as well, as far as the loans are concerned for businesses.
Yes.
All right. So that's good to know. We will touch that on another date. But for now, Tamara, I would love to know how you can purchase a home with your tax refund, because I know how it goes. Everybody's getting their their W-2 soon. It's a very exciting time for people, especially those that pay their taxes throughout the year. And they may be getting that tax refund. So please enlighten us on how this works if I have any listeners out there that may be interested in that.
Yeah, of course. So basically how that works is, you file your taxes, of course, and you get your refund check. So your refund check can go towards, your down payment, closing costs, whatever it is. And so how that works is if you get direct deposit, you want to keep it in there. Because whenever you deal with income, it's called source and season. So basically the source is, where's it coming from? Right. So now with, the paper trail of it coming from the IRS or whatever, now we can see who it's coming from.
Mm-hmm.
I have some people that make the mistake of, they get the direct deposits from the refund check, they pull it out and take it out and hold it as cash at home. And now,
not a good idea. Don't do that.
Not a good idea. And so now they're trying to put it back into their account, and now there's no way of sourcing where that money comes from. Everything has to be sourced. So the correct thing to do is whenever that wire hits, wherever, direct deposit hits, whatever it is, you want to let it stay in there.
Okay.
And go from there. And so that's how you can use your tax refund as far as additional assets for your down payment or closing.
Okay. That's some really good stuff, because oftentimes people are ready to purchase and they have that lump sum of money, which may also be good, because maybe a family member, if they were to want to gift maybe some of their refund to a family member, how would that work? Let's say a parent or a sister or brother or another family member, and they want to go ahead and gift some of their funds to a family member or friend that's looking to buy a home. How would that work?
So basically, and like I said, I'm a broker, so we differ from the transaction of if you would go to a bank or whatever. So whenever you get a gift from mom, dad, sister, brother, whoever it is, typically, and with me being a broker, I have different lenders I work with. So some of my lenders say, if it's a gift, it has to be from a family member. Some of my lenders say if it's a gift, it could be from family or close friends. So basically, everything is a paper trail. So I have to get their bank statements proving that that money is already in there prior to giving you that gift. So the donor is giving me a copy, and I have to have all the pages. Nothing can be blacked out, whited out, whatever. So everything has to be available. So they'll give me their bank statements proving that it was in there, and then from there they can either do a wire transfer, cashier's check, stuff of that nature to source the fund or put the funds into the borrower's account.
Okay.
Everything has to be traced. Everything has to be well documented.
That's a good point you make, because I actually just thought about something. I've also seen people where they take their tax refund, and instead of them putting it into a bank, they may put it on a card or something like that. And I always like to remind people, when all possible, deal with a bank, especially if you're going to be shifting funds, whether it be for a family member or yourself. It's just always good to have those funds start off in the bank. So it's a reminder for everybody out there: go ahead and get away from using a card or some type of online source where it goes directly to a card and not a bank to manage your money. It's very good to have a bank account. So, or I have had people stuff money under their mattress. That's where they keep their money. And that's not a good way, because like you said, you need to source where it comes from.
It has to be sourced in season. So whenever you're dealing with mattress money, that's what I like to call it.
Mattress money. So I can tell you had a flashback just now. You had a flashback. It happens. It happens.
Had mattress money. Just keep in mind, everything is sourced in season. Season means how long have you had it. I request 2 months bank statement. So that means it has to be in a minimum there of 2 months.
Okay.
But yeah, no mattress money to where you just deposit $10,000 into an account and say, okay, you're trying to close one day, and then you got the deposit of where did it come from the day before. It doesn't work like that.
Right. So now Tamara, let's go into this, one of my favorite other topics, student loans. I have met people who have told me, I can't buy a home because I have student loans. They don't even know if that's true or not. They just make the assumption. They're thinking, oh my goodness, there's no way. So I do want to talk about that, because that's a frequently asked question I get. Can I still purchase a home if I have student loans? But also anything else surrounding student loans that you may think would be helpful for our listeners as far as purchasing a home.
So student loans does not automatically disqualify you from getting a loan, a mortgage loan.
Okay.
Basically, there's a number of factors involved. So step one is credit score. And because the credit score is going to determine which loan program I can possibly qualify you for. So if you have anywhere from a 500 to 639, most likely you're going to qualify for FHA.
Okay.
I can do loans, mortgage loans for FHA as low as a 500 credit score. It might require some more money down, and interest rate's going to be higher, but of course we can do that. So let's say that you qualify for FHA. FHA guidelines for student loans, you have one of two options. If they're in deferment, I still have to count that into your debt to income ratio. So your debt to income ratio is basically how much debt you have and the amount of income you have coming in to qualify for a mortgage or a house.
And to be clear, that debt to income is literally like the monthly payment for that loan?
No, so your debt to income really is, you have two numbers. You have a front end ratio and a back end ratio. So your front end number is the amount of your income solely going toward your mortgage alone. And your back end number is the amount of your income going toward your mortgage and everything else on your credit reports, all your obligations.
Okay.
So FHA debt to income ratio can go up to 57%.
Okay.
And I say up to, because everybody's scenario is different. But when it comes to student loans, we take the full balance, whether it's deferred, whatever it is. So if your total balance of student loan is $50,000, we're going to take 1% of that and add it as a monthly payment.
Okay.
So 1% of that, you do the math, that's $500 payment being added onto your application, onto your obligation section. So even though you might have a monthly payment of $50, if that $50 is not going to pay off your student loan in the term of your mortgage loan, it will not be honored. So for example, if you have a 30-year mortgage, that student loan has to be paid off in 30 years or less for that payment to be, honored. If it's not, then I take 1%. The second option is you get on a payment plan, not an income-based payment plan, because half the time those income-based payment plans will not have it paid off in the term of the mortgage loan. You can get on a payment plan where you have to contact your student loan service providers and ask them how much would my payments be if I had these paid off in 30 years or less, including the interest rate. So again, if we go back to that $50,000 student loan balance, and we taking 1%, they say, okay, if your student loans are paid off in 30 years, your monthly payment would be $250, including an interest rate. I can honor that $250 payment versus taking the 1%. But you have to make sure you have the time. A lot of people run into that issue to where they have their student loans in deferment for so long. That student loan provider, you don't have the full 30 years. So now they have to go off with the amount of years you have remaining for that monthly payment.
Oh, wow. So is that like a reset? Is that?
No, it's just I've ran into that issue with some of my clients whenever they try to get on a payment plan. That's why I always advise them to contact their student loan provider first. So whenever you come to me, I'll tell you what you need to say or get, the wording to, for them to help you. But that needs to be done first, because sometimes whenever they finalize that payment schedule, some people just don't have the full 30 years.
Okay.
Whatever they done on their end, that's something I have no control over.
I see. I get that. So you just pretty much give guidance and then, okay. So I see FHA, that type of loan is an option. What about VA and USDA? How does that work? It is best probably to go with the FHA based on the guidelines, because not best in all cases, but sometimes is it possible to use those loans as well, and even conventional?
Yeah, so conventional, USDA, those all are higher credit scores. So 640 or higher is for conventional and USDA. Now, what the good thing with conventional products anyway is they will honor the payments that's on your credit report. So again, if you have a $50,000 student loan balance and your payments are $75, conventional will honor those payments on your credit report. However, there's so many other factors involved. They have a higher credit score. Their debt to income ratios are not as high as FHA, so that's another thing to take into consideration as well. But they will honor the payments on their credit report.
So thankfully, if someone were to come to you, you would still help them find the best loan that's the best fit for them. So that's really what matters, because everybody doesn't fit in a perfect box where you go to a bank, they may have one product, you have multiple products, so you can help with fitting them based on where they are and their needs.
Exactly.
Okay. That's good. That's some good information. And I'm so happy to be able to share this. This will be shared on YouTube and on other social media. I know we have one more topic to go over, but before we get to the next topic, can you let everybody know, we'll do it now and again at the end of the show, let everybody know how they can get in touch with you if they're looking to either put in an application or maybe just inquire more about purchasing or investing in real estate with
Oh yeah,
a
of
mortgage
course.
product.
So I try to be available to all my clients. Phone. I have a business cell, so you can call, text. My number is 843-804-7976. Again, my number is 843-804-7976. Like I said, as a business sales, you can call or text or whatever now, and I'm pretty good at responding. And the
Yes,
times.
you are. You're very responsive. Email, text, phone, all of that.
So yes, email as
Weekends.
well.
Mm-hmm.
Yes, I try to be available.
Yes.
Not bankers hours, not knocking any bankers, but I try to be available outside of 9 to 5.
And we appreciate you.
Thank you, thank you. Also email. My email is tyork, like New York, so tyork.aaff@gmail.com. And
Okay.
I'll have everything, for you as well.
All right, awesome. And that's we're gonna have that there in the description below, so you can have that, and you can just click on the link and just email Tamara directly, and she'd be happy to help with that. The last topic we have is collections and derogatory accounts. A lot of people have them anywhere from medical bills to the cell phone bill, or maybe just an old bill they just kind of forgot about, it kind of slid on the report under the radar. Can you please talk to us about whether or not, what are some ways that people can go about purchasing a home, whether or not that's even possible?
Yeah. So like I said, once again, I am a broker. So there are things that we can possibly work with you with. So when it comes to derogatories, so collection accounts, we do not look at medical. So medical collections, depending on, well, let me back up. Depending on if you're doing primary or investment properties, the guidelines for investment properties are a little bit different for when it comes to collection accounts.
Mm-hmm.
But for primary residents, we do not look at medicals. We do not look at charge-offs. If you're doing an investment, I would probably want to sit down with you one-on-one and review, look at your whole financial portfolio first to guide you correctly. But as far as for primary residents, not for medical and charge-offs, we do not look at. So it's not going to be penalized. You won't be penalized for that. However, say that you do have collections. So say that you have a repossession or, an old credit card or a cell phone bill that's in collection. So if it's under $2,000, we will not penalize it against you. If it's over $2,000, what we do is we take 5% of the total balance. So say you have 3 separate accounts, and all 3 of those accounts come to $2,000 or more, then I'll add all those accounts up and take 5% of that and whatever that is, I'll take and add that as a payment onto your obligation section on your application.
Okay.
Now, that can hinder the amount of house you can get if you don't have the income to offset it.
Okay.
But it doesn't necessarily disqualify you totally. So that's how collections work.
Okay. So wow, giving people hope by giving them some good information and providing some value. And that's what I love about talking with you. I'm always learning something new about how things can work. And that again is a frequently asked question, or something that's addressed often with people, because either people haven't seen their credit report in a while, and they're finding out while they're trying to get pre-approved with you, or maybe they're aware of it. So that's very useful. This is kind of like a bonus question, but what is some tips that you would give someone if they were looking to buy or invest in real estate in 2020?
I think honestly the most important thing is let me review your whole financial picture first. I hear a lot of people say, well, I want to pay this down first, or I want to, pay this off. It may not be necessary. So instead, before you start spending the money that you could possibly use to go towards closing costs or whatever, or whatever your difference is in your mortgage transaction, let me review your financial picture first, and then I can
Okay.
say that.
Okay. And that's really good. That's really, really good. And from really good advice. Because you're the expert and you can let people know what may be in their best interest when it's time for them to purchase. So again, your contact information is at the bottom of the description. I so appreciate you taking the time to go over the topics of student loans, purchasing a home during tax season, because there's a lot of people who want to do that. And of course, the tedious task of dealing with derogatory accounts and collections on your account. And as a reminder, guys, if you're looking at buying or selling, reach out to Tamara and actually let her look at your file, your financial profile, and she can really help you put things into perspective and even possibly help you put together a plan of action where you know in 60 days that might be a good time frame for you, or 30 days, or maybe right now. I think oftentimes people don't even know that they're eligible to purchase a home because they don't ask, and they just make the assumption based on what they know about their finances, when the most helpful thing is to speak with an expert, a mortgage broker like yourself, to get down to the bottom of that question. So again, Tamara, thank you so much for taking the time to do this. I am so excited to share this podcast with our listeners. If you want to find us on other podcasts like this, we're located on all the iTunes, Google Play, and major podcast carriers. So you can find us there. And we just look forward to working with you and helping you purchase a home this year. So yeah. Tamara, do you have any other things you want to say as we wrap this up?
No, let's just become homeowners.
There we go. Become homeowners and let's invest. All right. So check us out, charlestonreconnection.com. And we will see you on the next one. Stay golden and have a good one. This has been another episode of the Charleston Real Estate Connection podcast. You can find us on our website at charlestonreconnection.com. That's charlestonreconnection.com.